I want to show you a trading strategy that you're absolutely going to love. You see, what happens is when stocks or any asset class for that matter moves very violently in a short period of time in one direction or another, people get scared. And they are not willing to take what I consider to be one of the very highest probability trades out there, which is basically start fading those sharp moves for a trade. The odds are so unbelievably high that you see a mean reversion move that it's just a no-brainer. So let me show you guys what this looks like. So to show you the very simple concept of this, you can see here, for example, this is a stock, and you can see how sharply the stock moved to the upside. This happens to be shares of AMD. I don't know if you can see it. Anyway, upper left-hand corner. Anyway, the point is you can see that the stock moved very sharply to the upside, and then we actually ended up getting sell signals all the way up here, and then buy signals again a little further down here just a few days ago as the stock had risen. So people got very, very greedy up here, and they were not willing to basically make the bet that the stock's going to mean revert lower. And down here they got very scared, and now a lot of people who were shorting the stock or selling it are basically now essentially either sold at a bad spot or shorted at an even worse spot. This is one of the indicators that's included in our Market Rover tool, which I would encourage everyone to get. If you're interested in it, send us a quick email at support@thesteadytrader.com to show you just a couple of the more recent signals we just got a few days ago. For example, here in shares of Caterpillar. And you can see this is indicated with the orange arrows, and you can see that the stock stopped going lower when there was no more orange arrows. So like on this day right here, where my cursor is right now, and since then the stock has rallied, let's see, about 18%. Same thing, another signal that I just remember we took a few days ago is like UNH. Let me type this in, UNH. This is United. Oh, sorry, not UNH. It was not UNH. It was Caterpillar. The trade we did was in BMY, excuse me, BMY, which is Bristol Myers, also a healthcare stock. And you can see this stock started to bottom here, and there was, once the arrows stop printing, you get a buy signal. So in this case, the stock is now, since then, this stock is now about 8%. And again, what it has to do is with the fact that you need to learn to take the other side of human emotion. So when a stock like this, like AMD, goes vertical, at some point people get too greedy, and you have a super high probability trade to fade it, just like you have an opportunity to buy it here for a dip. We made a quick 12.5%, 13% for clients here very quickly on this dip based on a signal that we got in the Market Rover Pro. So it just goes to show that what happens is when you start learning that you need to not go necessarily with consensus when it comes to emotions, and you start learning to take the other side of human emotions. So when people get very greedy and very fearful, you have unbelievably high probability opportunities. And this certainly applies if you want to grow your account over time, like a capital gain strategy. But it's also an amazing strategy if you want to generate income from the stock market. It's one of the main things that we always try to teach clients and do for our clients as well, is really that income strategy. So the Market Rover here is a key tool for that. It includes several strategies embedded really to focus on both growing your account and also getting you that income. So if you guys have any questions on this, if you like this video, give us a thumbs up like. If you're interested in the Market Rover, send us an email or leave a comment down below, support@thesteadytrader.com. And I'll talk to you guys soon.